You're listening to the Reinvest Podcast, where each Tuesday we show business owners and entrepreneurs how to diversify into real estate by equipping you with the tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Ciminillo. Hey guys, welcome to episode 145 of the Reinvest Podcast. Interesting timing at the release of this podcast from a national news perspective. Elections were just yesterday.
I just lost a school board election. So if any of you ever wants to feel bad for about a month, just go run for public office and you'll have a plethora of different experiences. And so I was talking to a friend the other day and I was like, it would be good for every single person to be forced to run for a public office. And it would force people to be nicer to each other, because I think people can get very critical and very nasty if there's even a perceived misunderstanding between you and that person. It just goes south very quickly. But no, it was a great experience. A lot going on nationally as well. And our guest today, John, we were just talking with him about the election that happened in New York City, because that's where he's taking this podcast from. But interesting times. But John, welcome to the podcast. How are you?
Hey, Seth, Garrett. Pleasure to be here. And Seth, I wouldn't feel too bad about your election loss. I mean, with the age of some of these, politicians, I think you have a long runway ahead of you to try again. So.
Yeah. You just have to outlast them.
Yeah. If my spirit hasn't been beat down by then, yeah, maybe.
Yep. Give it a day or two. You'll be all right.
So John, you were telling us off camera, you kind of bounced between Georgia and New York in terms of where you live, but give us a little background into your touch point into real estate. What do you do today? And then we'll get into kind of your origin story about why you're even interested in this.
Yeah. So, quick background on me. Started my career in wealth management back at a very interesting time. It was, 2008, right during the financial crisis. My internship with Smith Barney ended, and then they hired me and started my career building a wealth management practice with Smith Barney, and then I moved with the team I was on to Wells Fargo Advisors, and then I spent some time with JP Morgan. So did about 10 years in wealth management. Loved that business. But being that I got into it so early, my early 20s, wanted to do something more entrepreneurial. So I had invested in a startup with some partners, and so left wealth management to build a startup for a few years. And the timing was good with what we were building, and so we sold that company to a publicly traded company. So that was
what was the startup you guys did?
Yeah, the startup was not in Timberland and not in finance. It was we had a team that we got with that had these patents around drug delivery systems. So the easiest way to explain it is, if you take a Tylenol, there's actually some technology in there for controlled release of that drug. And so we were able to go to different supplement companies and help them stabilize their formulas, just create a new range of products with this technology that we had. And we built a company with some manufacturing capabilities, built it to about 60 employees. And then a publicly traded company saw the vision of what we were building and took us out. So,
Wow.
That was
Sounds like
a fun ride for,
sounds like such a technical field from a finance perspective.
Yeah. So I ran sales and operations for that business. And wore a lot of different hats being a startup, but that's what kind of gave me that interest in the entrepreneurial world. It allowed me to step out of the corporate world into something more entrepreneurial without me being a founder.
Yeah.
And now I'm a founder today of Southview, but I just found that I preferred the other side, right? I think there's benefits to being in the corporate world, and there's also benefits to being in the startup world. I think it's 50-50. It just depends on, the type of personality that you have. But that was a nice stepping stone.
Predictable growth and high income on the corporate side, and sleepless nights and uncertainty in the entrepreneurial side. So,
So
you,
now,
Yes.
so today, so you were part of the startup and you went from the startup to now being a partner in this Southview Timberland Investments.
Yeah, so your listeners are probably wondering, where does the timberland come into all of this? And my family bought a timberland investment in 2008. So right around the time that I was, getting into wealth management, my family they live in Savannah, Georgia, and they were looking for a recreational property, rural recreation and investment property. And they started asking around of, who could be the person to help them find the right tract of land. And the name Terry Myers kept coming up, who is now my co-founder and business partner. So early on, I got on that land, that family land, got to know Terry better, got to learn the asset class. He was very successful investing in timberland. And, pretty early on, he said, maybe you should put some money with me and start, buying some of these properties and learning about this business. And I got to know it, and really just said, why aren't my clients in wealth management getting access to this strategy? So years went by, did the startup, and I was kind of at a good place in my career to launch this strategy, which we can talk more about.
So, John, you asked a really important question. Why aren't my clients in wealth management getting access to these types of investments? Somebody coming from a wealth management perspective like yourself could answer the technical side of this, but aren't there only certain types of investments that a financial planner and a wealth manager can recommend to a client? And normally they're not like alternative or real estate related investments.
Yeah. So at that time, yeah, you're right. I mean, these days RIAs and even the big banks are doing a lot more alternatives, and that's becoming a very meaningful percentage of client portfolios. But back then, I mean, yeah, if you wanted access to timberland, you could buy the publicly traded timber REITs, like Rayonier and Weyerhaeuser, or you could buy timberland directly, or you could go to what's called a TIMO, a Timberland Investment Management Organization, but you need 30-40 million dollars for them to to build you a separately managed account, a custom portfolio. So what we're doing today is creating a vehicle for all these groups to get involved at lower minimums but still have that TIMO like experience.
So I want to press in a little bit on, was it Terry Myers you said is your co-founder?
Yes.
So I've observed this a lot where there's somebody who's kind of the senior in a certain industry and area, and there's, this often quoted proverb of when the student readies, the teacher will appear. Describe the beginning of that relationship in terms of, did you see the opportunity in front of you? Was it enticing to you? Did you know what you were committing to? Or after you said yes, hindsight was like, man, I think I made the right decision?
Yeah. So the relationship early on was, fairly, informal, right? I mean, we had the family property. He lived close by. This was in Middle South Georgia. Our families would have dinner together. I just got to know him, as a friend, right?
And you were how old at this point?
I mean, I was in my 20s, mid late 20s. And he's, about, 15, 20 years older than me. So he was definitely my senior, but I had seen that he had built wealth in this, in this asset class. And, he has his own opinions, his own strong opinions about the stock market, right? He just doesn't believe, in those types of vehicles. Land, classic cars, and gold are the three things that Terry invests in.
America.
Yeah. So that kind of gives you a sense of the type of assets he likes. And so he would kind of give me a hard time about what I did in my business, offering stock portfolios and things like that, things that were tied to the market. And generously, he said, hey, if you'd like, why don't you just contribute, whatever you are able to into a few deals? And I can really show you what's possible with investing in timberland, investing in land, and you can kind of get a feel for it. And after we did a handful of deals, the conversation just kind of organically just led to, could we scale this? Could we offer this to a broader set of investors? And the short answer is yes. I mean, we have a great network, great deal flow, and so that conversation turned to how can we offer this to investors outside of our network?
So you had alluded earlier that the barrier to entry was pretty high formerly to get into this. I mean, to have 30 or $40 million is going to be a smaller portion and pool of investors and probably more family office. Is that still your client base, or what is the minimum for somebody now to consider this as an investment vehicle?
Yeah. So, I mean, if you want to do it yourself, do it directly. There's nothing preventing you from going to any of the land sites, landwatch.com, and finding a rural area outside of your, town in the Southeast and buying, 50 acres or buying 100 acres and, learning the hard way, right? Doing it directly yourself. You can absolutely do that. But there is a big learning curve. I mean, there's a lot that you need to know to buy good deals in this business. Finding the deals that aren't on the sites, that aren't on the widely publicized sites, that's where the opportunities mainly come from. That's typically where all of our opportunities come from for our fund. Relationships, like for example, if you want to harvest a property, and we can talk about the different ways that we generate returns, because I think that would be helpful. But if you want to go harvest a property because timber prices are where they're favorable, just because you want to do that doesn't mean you can get a logger on your property to take advantage of that. Whereas we have the relationships, personal relationships, where we can get those groups out there in a timely fashion to take advantage of the good prices in the market.
Yeah. John, I invested in an 18-inch Husqvarna gas-powered chainsaw. So
oh gosh,
I'm pretty sure I could harvest some logs.
So now's a good time.
Yeah, you'd be out there a while. Yeah. Yep.
Now's a good time. Let's talk about how do you get a return for your investors by investing in timberland. So let's just break down how that kind of works.
Yeah, so I think it's important now to talk about the old way versus the new way. So the major timberland funds, what they typically do is they'll raise hundreds of millions of dollars, buy tens of thousands of acres, lock up investor capital for 10 years or more, typically. Target returns of maybe 4 to 6% because they're only focusing on the timber returns from harvesting timber. And then they just sit back and collect the management fee. So timberland has historically been in institutional and big pension portfolios to be that very stable inflation hedge, just that very steady part of the portfolio. And investment managers don't expect a lot from it in terms of returns. It's just that helps with risk-adjusted returns. What we do at Southview and the Southview Timberland Fund is we take the opposite approach. So we're raising a very focused $50 million fund. It's only a 5-year commitment, and we target returns of 12 to 15%. And our success is really tied to the carried interest, not to the management fees. So we have an incentive to outperform our preferred return, and I can talk about what that is. Whereas those bigger funds they're just in it for the management fees. So we do things a little bit differently in that we buy more mid-sized properties, smaller tracts of land that the institutions typically overlook.
And what's that acreage size for someone who would, because that's probably subjective. What I would call small and you would call small is probably different.
Yeah, so several hundred acres to about 2,500 acres is our sweet spot. Whereas the institutions, they won't look at a deal unless it's 10,000 acres or more. they won't look at a package unless it's 10,000
Where in
acres
the
or more.
world in this country are they finding 10,000 acres of just wooded, harvestable land?
Apparently in the Southeast.
Yeah, I mean, I could send you any number of packages that are available for sale right now that are over 10,000, 15,000, 16,000 acres of some really nice looking timberland.
Different than
Yeah.
Ohio, that's for sure.
Yeah.
We're just cornfields for thousands of acres, so.
Yeah, I mean, for perspective, in the state of Georgia alone, there's 22 million acres of timberland.
Wow.
So there's Georgia's the number one forestry state. That's why we love investing there, because the mill infrastructure is there to sell our product to. But just let me back up and explain how we generate returns for our investors. It is harvesting timber, right? It's taking advantage of timber prices. We get income from that. But because we stay close to every asset compared to the bigger funds, we do things like opportunistic land sales, so more like real estate sales, where recreational buyers will pay us a premium for our land. So if we buy 1,000 acres, we can sell typically 300 or 400 acres of that property fairly quickly to a recreational buyer, development buyer, someone who's looking for a home site. At a much higher price per acre, lowering the cost basis of that deal, and then we'll retain the remaining acreage for longer term for harvesting timber and recreational leases that come off the property.
Yeah, you mentioned recreational leases. Are those hunting rights and stuff like that, or?
Yeah, hunting is huge in the Southeast, and in our portfolio and personal portfolios, we lease out 100% of the land for recreation. For hunting, it's in very high demand.
You know how people who have doctors friends will ask for like consult, like, hey, can you come look at this? Do people ask you if they can hunt some of the properties you guys have in your portfolio?
Yeah, so that does come up in conversations. Yes, it is. And hey, look, if it's not being leased already, which it typically is, we would be, we could figure that out for investors. Yeah.
So I have two questions, just because, Seth and I spend more time in the more of the residential commercial real estate investment side. And so this is a really interesting episode for us because it's not what we're familiar with. And, in that side of things, you're depreciating buildings on a certain schedule. So what does the depreciative aspect look like for a land purchase like this? Because historically, I don't think you can depreciate land. Are there tax incentives that are able to be realized and taken advantage of by investors?
Yeah, so you can't depreciate land. So there's nothing to be done there, but there are tax advantages with the asset class. A couple big ones. As long as you've held a timberland property for over a year, the timber harvest income is taxed at long-term capital gains.
Oh, okay.
Kind of like when you sell a stock after a year, right? It's taxed at long-term capital gains. That's the same with the timber income as long as you've held the property for a year. And then there's also a thing called timber depletion. And what that is when you buy a tract of land with timber on it, you figure out what the value of that timber is worth, and you come up with a basis for that. And then as you harvest it, you can actually use the basis to offset the income that you generate from that timber harvest. And we have very well versed CPAs who are based in Atlanta that are very familiar with the timber tax code and help in our fund with all of that.
So I think what's interesting is the timing and the knowledge base to look at the species of the trees that are there and forecasting a schedule of how much you're going to be able to harvest without over harvesting. Because in our area in the Midwest, timber rights are kind of that ancillary benefit of buying ag farmland. So maybe you're buying 400 acres of ag land and 60 acres are wooded, and I've walked the property and I know I'm going to get probably 60 grand after, harvesting hardwood trees from that. And it's more of an ancillary benefit, but there's a schedule, and at least in our area, I've always heard, now I know hardwoods grow a little bit different than maybe pine and stuff like that, but by the time I harvest, I'm going to be in a good position 15 years from then to be able to reharvest again. So how does that affect the hold period that you guys have for these investments?
Yeah, so you mentioned the in the Midwest, the farmland being the majority, and then timber kind of being an ancillary. Uh, for us, I mean, that can be flipped because we have so much timberland in our area, but we also have a good amount of ag land as well. So in our strategy, we can buy properties that have ag on it as well. So if it's again 1,000 acre property, maybe 700 acres is timberland, 300 can be agricultural land. And sometimes we'll make an investment to irrigate it, put a pivot on it, and then lease that out for a cash rent. Improve the value by irrigating it, and then lease it out to a professional farmer for cash rent. So that's part of our strategy as well. Another way we create returns. But in terms of the harvest strategy, we take a bit of a different approach than the bigger funds. The bigger funds, they have, a lot of smart, foresters on their team that are, they have very set, harvest schedules about how they, go about, realizing the income from the timber. I mean, when you're managing tens of thousands of acres, right? You have this rotation, this schedule that you're on. We take a different approach. We're more opportunistic. So we take advantage more of spot pricing opportunities, and like what we saw during COVID. There was a big spike in timber prices, lumber prices, and we
all the builders were like, "This is terrible," and you're like, "Oh my gosh, this is amazing."
Yeah. So that's a great example. We went to harvesting a lot of timber during that time, and made some great returns. And so the beauty of our asset class is no one ever forces us to harvest our timber, and we don't use any debt in our fund. It's all equity, and so we own all the properties outright. We have ultimate control. And so if timber prices are low, well, we can just sit still and let biological growth take over, let that product become more valuable, and then when prices are more favorable, we take advantage of that. And because of our relationships, as I mentioned, we can get loggers on our property to strike and take advantage of those better prices when they become available.
I'm reaching here, but I would have to think that your knowledge on the wealth management side and your understanding of commodities trading is probably very applicable to understanding the timing in managing the assets you guys have, because that's what it is. It's commodities. You guys are dealing with a commodity. It's raw material.
Yeah, I mean, it's been helpful in a lot of ways. I mean, just being able to understand what these financial advisors, these RIAs are dealing with on a day-to-day basis, with their clients. I mean, that's been extremely helpful. What we're offering them for their practice is a differentiator, right? They're a lot of times business owners, right? They're wearing a lot of different hats. They're business owners. They're the chief investment officer, and they're the financial advisor, and they want to offer their clients something different than the guy down the street who's offering the same model portfolio's. And so that's been very helpful to understand what they are trying to achieve in growing their business. And we've been very helpful to some RIA groups to help differentiate what they do.
So one of the questions I had from your pitch deck, it seemed like there was some different ways for investors to actually invest in this. Is there a way for someone to add this? Like if they're working with a financial investor, they can actually find one of your funds and invest in, or is it all private investment directly through you guys?
Yeah, so we're a Regulation D 506C fund offering, which means we can only work with accredited investors, and they can invest directly with us. So if someone is interested, they can reach out to us directly, and through our fund administrator, we can get them onboarded to our platform, and they'll get all the reporting through our fund administrator on the performance. We do quarterly reports, investor updates, in the middle of those periods. But as of now, we're on the Charles Schwab Alternative Investments platform. The Southview Timberland Fund is. And so anybody who is working with a Schwab affiliated advisor can get access through that platform, and it'll be on their Schwab statement. So the Southview Timberland Fund will be on their statement. It'll be reported with all their other holdings. And we're working on getting on other platforms right now.
Yeah. Okay, cool.
So before we go into our smaller pockets, hopefully this isn't a segue into it, but one of the questions I have is from a risk perspective, fires and bugs.
Mm-hmm.
How, what is that even a relevant? I mean, I'm just thinking logically. I'm looking at fires across in California, and I'm like, well, gosh, I would not want to be owning 1,000 acres.
Yeah, what do you have?
Right
is
now.
Just insurance on timberland, or?
Wow.
Yes. So there's really not
no smoking on your properties.
Yeah, no, it's true. There really isn't an affordable insurance product for timberland. There are insurance companies that will underwrite that, but there really aren't a lot of affordable insurance products. So in our region, fire risk is not a huge risk because we just have a wet climate, right? So that's more of a West Coast problem. So we don't have a whole lot of forest fires in our area. The pine beetles that you hear about. Canada has been having a lot of issues with the pine beetles. It's decimated thousands of acres, tens of thousands of acres. But because in our region we have some of the best foresters, some of the best land management practices, if that does start to pop up, we nip that in the bud pretty quick. So we tend to mitigate that. There are risks from things like hurricanes, right? Those can damage properties. The bigger risk is buying a timberland property that isn't close to the mill infrastructure, because if you're further than 50 or 100 miles, you're going to get eaten alive in fuel costs trying to move that product to the sawmill. So that's just something to really pay attention to, and it's pretty intuitive for us. But so there are risks. Yeah, I mean there are natural risks out there.
Have you guys ever thought about buying a sawmill?
We want no part of that business. Yeah.
So not an asset class where you want to be that vertically integrated.
Yeah. We want to own the land. We want to manage the timber plantations. We want to do recreational leases, agricultural leases. I mean, we do other creative things too. I mean, we've done cell phone tower leases, mineral rights. There are a lot of other, ways to generate returns besides just the timber, but yeah, we'll leave that to the professionals to own the sawmills. So,
all right, John, we're going to jump into our smaller pocket segment here.
Sure.
So go ahead and tell us about a deal that has gone wrong. I know off camera we were talking that because of some of the risk mitigated nature of timberland, you might not have a great example for there, but you invest in real estate personally as well. Mm-hmm. So why don't you go ahead and tell us a horror story that you've had, and what did you learn from it?
Yeah. So just to give your listeners, kind of that off-camera context, just briefly, when we buy timberland, we typically use all equity, and there's never anybody forcing us to harvest the timber. So kind of owning that outright, that does mitigate the risk in terms of us having to sell, because, debt is being called, or, we have, a mortgage due. So, we've done pretty well with the timberland side. I don't have thankfully, a horror story to share on that end, but personally, I do invest in some single family rental properties. And just a very short story is I love Savannah, Georgia. I buy rentals in Savannah, Georgia. It's a great just a great city, and there's a lot of growth happening there. But there are some older homes, and there's just one in particular that I have, and I still own it today. But the first year and a half of owning it, things were pretty smooth. But this was built kind of in the 1920s, area. So it's definitely getting older, and it just every year, there's just something that is popping up with this deal, but the cash flow is good. I mean, Savannah has, pretty good rental rates. It's got, the College of Art and Design there, so it's got a, strong rental market. So, and I own it outright. I don't have any debt on it. So, but because the thing is just getting older, these maintenance costs are just, kind of continue to pop up. And, thankfully that's like my big horror story. I know it's probably not, too exciting, but, there's just been a number of things that have come up, recently that have just, taken a hit out of, the returns that I've had in it. So
do you think that will inform your investing in single family moving forward? I mean, what's kind of maybe the lesson or, from that for you?
Yeah. So a lot of homes in Savannah are older. I mean, it's just that's just the market there. Hasn't deterred me. I mean, I still want to continue to buy single family rentals in Savannah. But I mean, I have had more success and less heartache investing in timberland and investing in land. So, we'll probably continue to push more money towards that asset class. And there's no tenants, there's no maintenance costs with the land, and the returns are good. So, would probably sway me more towards, putting more into timberland.
We need to come up with like a nickname for you, like the Baron, like the land Baron. I mean, I don't know. I feel like you've got some really marketable stuff with this with this type of investment strategy. All right, John, we're going to go into what we call our golden nugget. So, John, you've given us a lot of really great advice. I think you've opened people's eyes a little bit to something that they probably don't all the time consider.
Especially in Northwest Ohio where it's flat and just corn.
Well, it's funny. I flew from Sarasota into Atlanta, and coming out of Atlanta, I was shocked by how densely wooded it was in that area, northern Georgia. And, I'm sure it's probably a reflection on the state as a whole. So there's a lot there. But maybe give us something a little more fundamental to the way that maybe your investment thesis or the way that you conduct yourself on a professional perspective. What's some advice that investors listening to our podcast could apply to their investment strategy or the businesses that they're operating?
Yeah. I think what we're doing at Southview is we're creating access. And so, historically, our asset class, timberland, and specifically our strategy has been closed to our personal network and the returns that we're able to generate. And so, the gold nugget, whatever you'd like to call it, is to have access to the team that we have in place, with my co-founder and the other acquisitions guys and the network that we have that have been built over decades. Would be very hard to duplicate, specifically in this strategy. So there's any number of, multifamily strategies, single family home strategies, commercial real estate. So, for people who are looking for something different, something unique, to add, to their investments, we welcome a conversation, because that's the main thing that we're trying to do at Southview is provide access to, like I said at the front of the conversation, my whole 10 years in wealth management, we never had a conversation about investing in real assets, investing in timberland, and we just wanted to create a vehicle that would make it more accessible and easy for clients to get exposure to this.
Do you think moving forward that this trend will continue in terms of other companies trying to do similar things more on a private investment level versus an institutional level?
Specifically in timberland, or just generally?
Timberland.
It's a pretty small pool right now. I mean, there's really not a lot of other groups doing what we're doing. But I could see it. I mean, there's any number of farmland funds. You see those agricultural funds, farmland funds. But for what we're doing in timberland, there's just not a whole lot of options. And look, if other groups wanted to get started and do something, comparative or, similar, I think that could be potentially a good thing because, there's a lot of opportunity in this space, and the more education that groups can have on it, I think that's just going to be better for Southview, because that can be a challenge in what we do is
the unfamiliarity of it.
Yeah. But it doesn't take long for people to understand, how it works. It's just on face value, it does take them a minute to understand it.
Moving forward, let's say interest rates come down, I don't know, 150 basis points. Do you guys see a strategy where you blend some debt into the funds that you have for leverage sake, or is that a hard internal policy that you have? No debt, all equity, all the time.
Yeah, I mean, we within our fund offering, we have the ability to use debt if we want. I mean, we do have that in the offering documents, but historically, personal deals, we haven't used debt. And it's just for that simple reason is we love that control. We love to just own it outright. Sometimes the cash flows can be a little bit lumpy too, because if timber prices aren't where we need them to be, we don't ever want to have to harvest to make a debt payment.
I would think that you could find like an ag similar product to where your mortgage, principal and payments would come in more of like a cyclical cycle versus something on a more monthly, stable cash flow perspective. But maybe you're saying every 2 to 3 years is when you realize a windfall of capital, and not once a year.
Yeah, no, we're realizing windfalls in a shorter term, time than that, with the opportunistic land sales that we continue to do.
Right.
I mean, we're doing those, right now in the fund. But yeah, I mean, you're right. I mean, those products are typically set up with like an annual payment, for like a farmland, loan. So
can I
yeah,
connect you with a very lucrative investor? Dave Ramsey. He'd be very proud of you guys.
Yeah. Dave Ramsey would love us.
Yeah, Dave Ramsey would love you guys.
It's an easy sell. I get 10 cents on the dollar for every dollar he invests. But
it's true.
It's true.
I guess the other thing too is, I mean, so many people are waiting for interest rates to go down, and I guess kind of the way we think about it is, if you're waiting for an interest rate to go down a quarter point or half a point, that's the difference between you affording something and not. You're probably running it too close as it is, and you probably shouldn't be buying that thing if you're just waiting for the interest rate. So
don't get me wrong, I love it, but I just am curious because, again, our circles, it's a lot of leverage, and I've often thought, like, man, what would it be like to have just all equity in the next 3-4 deals that you go into? And I do like the idea of having the control that you're talking about, and it puts you in more of a proactive seat versus reactive. And I always say hope isn't a strategy. So I think that's pretty cool. Okay, hey, some closing remarks here. What has been one of the best resources in your business career development?
Yeah, I mean, the best resource has been, and this isn't like a cop-out answer, but has been just taking action and doing the work. I mean, I think a lot of us, and I'm guilty of it too, is, you listen to the podcast, you read the books, you watch the YouTube videos with all the experts, but nothing beats the real thing. And for some time, we kicked around the idea of launching Southview, more than kicked around. I mean, we had, some great conversations about it. And there was any number of, time, in what was the structure going to be and so forth. And at one point we just had to go and say, hey, this is what we're going to do. This is the structure we're going to put forth. And, nothing has been, more beneficial than actually just getting underway and, burning the boats behind you and saying, this is what we're going to do.
Yeah, no, that's great. Yeah. Inaction is a dangerous thing. So I love that.
It's amazing how much time can click by and you look back and you're like, man, I haven't made any progress on this yet. And you're like, oh shoot.
Yeah. I mean, Garrett, it's so funny. So, we launched this company, about 3 years ago, but I have decks that I built for this business from like 2014, 2015. Like this was in my head for so many years. And I had a great income in my wealth management business, that I was going to walk away from. There was, things that were holding me back from pursuing this. And so yeah, I mean, had I launched this back in 2015 and where I would be today, it's like
you can't play that game.
I'm telling you, and just with what land values have done and what it's just, we would be so much further down the line. But I feel good where we are today. I mean, we're making great progress. But
and I want to hit the pause button on what you said. If you're listening to this episode, you can take that and learn from it so that you don't have to be the person that says, man, what if I would have started this earlier? Because the best time is now. I love that. You cannot get around it. John, in closing, where can people find out more about Southview, maybe get in contact with you? What are the best ways to do that? We'll put that in the show notes. Yeah,
so southviewtimber.com is our website. I'm pretty active on LinkedIn. You can find me there. John Brenard. Those are two of the best places to find us. We have a contact page on southviewtimber.com. So if anybody's interested, those messages come to us, and we'll get you set up with someone on the team to learn more. So
awesome. Well, man. Yeah, I really appreciate your time today and sharing with our audience what you guys are doing. It's pretty cool.
Seth and Garrett, so much. Appreciate you so much for having us on, and love what you guys are doing. Thank you.
As always, excited that you joined us for another episode of the Reinvest Podcast. If you want to learn how you can use your hard-earned capital to diversify into real estate, go to our website, reinvestcapital.us, and shoot us a message. Move farther, reach higher, and grow deeper.